Hello, my name is Faisal Khan. I'm a banking and a payment consultant. When it comes to pre-funding, the money that is needed in the payout country for them to pay out, it is a huge problem. Not only is it a huge problem, it's one of those limiting factors that prevents companies from expanding. Why? Because money, as we all know, is a limited resource. And if you have limited resource of anything, then you have to ration it. You have to think carefully where you would like to place it. So for example, if you are currently have a requirement of $50,000 per payout location and you have 4 countries, you've got $200,000 committed. Now let's assume business is good, demand is coming in, and they want you to go to 5 more countries. Each country requires a minimum of $10,000. And how do you bring $10,000? What if they require $15,000? How do you bring $75,000? So how do you bring $75,000 when you're already maxed out of your $200,000? Well, that is the pre-funding problem that many institutions face. So the thing is, there are many hedge funds, there are many private investment firms, etc., that have now entered into this business. If they can make, for example, 25 basis points with you on a daily basis, let's say, on a 200 working week or 200 days per year, you do the math. You know, what is 200 times 0.25? It's 50%. They'll make 50% of their investment. 50% annualized rate is really good for them. So there are companies that are willing to give you pre-funding, provided they take a lien on the origination of funds when it's coming in. So for example, if you're doing from USA to Nigeria, they will give you the payout money in Nigeria with the correspondent bank. They'll put it there. But for purposes of safety, they will take the lien on the income that they are collecting in the United States. And then they can go after the money transmitter license holder or the bank or whoever it is against their bond or surety bonds, etc. But such type of arrangements are available. What is not available in these pre-funding arrangements are low amounts. So if you're trying to go and raise, say, hey, I only need pre-funding for $50,000. No. If you need pre-funding for $100,000, maybe. That's probably what they will start with. Typical ranges for pre-funding start at $500,000 and then go all the way up to $25 million. If you are someone who is in the market, who is an incumbent, it have to be an incumbent. Startups very rarely qualify for this thing. But if you are an incumbent, you have active traffic and you need pre-funding money, talk to us. We may be able to help you out. There's a contact form in the description below. Fill it out. I will then email you and tell you what other additional forms you need to fill out to assess whether you are a case that can be forwarded to these companies that we work with. We have quite a few of them who are willing to lend money. There are various models. Some work on a very fixed model, 25 basis points is mine. Some will do a revenue share. They say, okay, whatever you show us your rev share, we'll take 15%, 20%, 30%, 40%, 50% of your FX margin. It depends. Now, you may or may not agree, but remember, other people's money. If they want to give you money, they're going to have a say in how they do revenue share with you or the profit sharing with you. But if this is something that you are open to, let's have a call and let's try to see if we can hook up a deal and make a deal with you. So pre-funding ought not to be a problem. Like I said, there's a contact form in the description below. Fill it out and we'll talk. Till next time, Faisal Khan signing off.